Hey everyone, welcome to episode 5 in my series where I review my favorite managers of all time who have funds designed for passive income focused investors like us. So this is episode 5 where I will cover Brompton funds. So if you missed any of the previous episodes, be sure to check them out. I grouped them all in a specific playlist, so just click on my channel name, go to playlist, and you'll see that playlist, favorite fund managers. So Brompton was founded in the year 2000, and their goal is to provide, and I quote here, to provide innovative, income-oriented alternative investment solutions for individual investors in Canada. So I took that quote right off their website, by the way. They are definitely my favorite split share fund or split corporation fund manager, and also have a really nice lineup of covered call ETFs, which we all love and we know that they are income oriented, right? So let's go through their entire lineup together, and then I have some exciting news to share with you at the end of the video. Let's get to it. All right, everyone, I am on Brompton's website. Let's go through their fund lineup together. When you're doing research or looking up anything in terms of ETFs, always go on the fund's website, everyone. Don't do your research through your broker or other third-party websites. Go straight to the source. And Brompton, I have to say, have a really, really nice website. So these are their covered call ETFs. They call them their equity, income, and growth ETFs. They got quite a few of them. So you have HIG, this is their healthcare one. So this would be equivalent to HHL from Harvest or FHI from CI, and even Evolve ETFs has a healthcare one. So, you have all the best global healthcare companies in here. Same thing like HHL, basically, same type of companies. They have a technology one, TLF. So this would compare to TXF or a TXF from CI or HTA from Harvest or ZWT from BMO. So it has all the best technology companies. And by the way, you could see the yields here. Very, very nice. You could actually see all the yields here. Keep in mind, these are covered call ETFs, guys. They're not split funds, so they will pay out every month. And BDIV. BDIV is the Global Dividend Growth ETF. So this is probably one of their most unique ones, as well as BFIN. So BDIV, this would compare basically to ZWG. BMO's global, so ETF, covered call ETF. So you have the best dividend stocks from all around the world with this one here. Almost a 7% yield, pretty nice. This compares to ZWG. BFIN is one of their unique ones because it's a North American financials dividend ETF. So it has both American and Canadian financials in there, banks and life insurance, asset managers, etc. So this is actually a good lower risk option for FTN or FFN, right? Because FTN, FFN from Quadravest, those two split funds have North American financials. It's pretty hard to find a covered call ETF that has both Canadian and American financials in one. So BFIN is one of them. Here you have EDGF. This is their European dividend covered call ETF. So this compares with ZWP or ZWE from BMO. So you have all the best blue chip dividend companies in Europe. BLOV, this is the Brompton North American Low Volatility Dividend ETF. I found this is pretty interesting. If you're a conservative investor, this is probably a good ETF to get. It has, the yield is not high at 3.74, but it basically mostly has consumer staples, utilities, and healthcare stocks in here, all purely defensive. So a really good option if you're a very conservative investor but wants defensive sectors but still wants some covered call income here. This is one of their newer ETFs, by the way. Then you have a BREA, which is the Sustainable Real Assets. So everything in terms of infrastructure, real estate, utilities, anything that's real assets that fall under that category. So also fairly defensive sector as well. So these are their covered call ETFs. You could check the performance for each and every one of them. I'll just show you because they have a really nice website here. So when you open any of them up, this is what you will see. You will see where is the management fee? The NAV, what it's worth, the closing price. This is the stock price. So keep in mind, these are ETFs, right? They're open-ended funds, so they're always the stock price is always going to be very close to the NAV price. What is the AUM, assets under management? If you scroll down, under the overview tab, which is the default tab, you will see everything you need to know. The inception date, the management fee. If you click on portfolio, you will see the whole breakdown of what type of stocks, the region, and of course have all the stocks. And these are the healthcare companies. So you'll expect to see AbbVie, Pfizer, AstraZeneca, United Health Group. It's always the same ones basically. Lilly, CVS. So you'll recognize a lot of them. And one really cool thing about Brompton's website, they have this for every single fund. So whenever you click on any single fund, this is how you will see it. You could click on performance. You could actually see the performance since inception, which is really useful, right? This is the annual compound return. So basically what is the annual compound return? If it says since inception 7%, it means that if you own this ETF from the beginning, on average, your return would be 7% a year with this ETF. This of course includes the distributions, right? And you could even see the year by year returns as well. So if it's in a bracket, that means it's a minus. But as you could see here, 2021, of course, everyone had a good year. You could see the by year, but the annual compound return is really more important. So besides that, in terms of ETFs, they do have a preferred share ETF. This one here, BPRF. This used to be a closed-end fund, and they transitioned it into an ETF. This is very interesting. This is US preferred shares. So if you're looking for preferred shares, always go with the US market. That would be my number one advice, because the Canadian market is the yield is not as good. You're always going to get about 4%, and it's very limited. But on the US market, they have a big preferred share market. So what's interesting about this ETF is that they have a leveraged one. So BPRF is the non-leveraged one. So this is just fixed income or preferred shares on the US market. So preferred shares is a lower risk asset class, but they have BEPR, which is the same thing, but it's leveraged. So you can see the difference in the yield, right? 5.5, 8.78. So this is a really good option if you want preferred shares. I'm not a big fan of preferred shares, but if you want something a little bit safer, personally, I would always get a covered call solution, but hey, they have a leverage option. This is probably, if I'm going to invest in a preferred share ETF, it'll probably be BEPR. So those are the ETFs. I'm not going to show you the other TSX traded funds. There's a couple of them, but nothing too interesting in my opinion. Now let's check out their split funds. That's where the magic happens when it comes to Brompton, in my opinion. All right, split funds, everyone's favorite, right? So they have 7 split share funds. I own 5 of them myself. I think these are really awesome. If you're an income oriented investor, this is definitely a must for you. Of course, in moderation, right? There's some split funds have various degrees of risk in terms of missing dividends or not. Keep in mind, when I say risk, according to talking about split funds, it's always about missing dividends. It's not about the stock quality. They're all blue chip stock quality. So we'll go through them one by one. I really love the breakdown on the website here. You could actually see all of them. You could see the net asset value. This is the net asset value of the Class A shares, not the unit NAV. Okay, the unit NAV is Class A share plus the preferred shares. If you actually click on preferred shares here, you will get the list of the same 7 split funds, but these are the preferred shares. So you actually see what the dividend rate is, the distribution rate, and the NAV, which is always on the preferred shares, going to be around $10, right? So if you add, for example, SBC here, this NAV $10 to the $9.51, that gives you the unit NAV. So as long as that unit NAV is over $15, you will get the dividend for the Class A shares if you own the Class A shares. So let's go through them one by one. I want to go into detail on these split funds because I really like them. I think Brompton is the best split fund manager. Their main competitor is definitely Quadravest. So we'll go through them one by one. This is their Split Bank Corp. This is their oldest split share fund. It was opened or created, I think, in about 2005. If you go to overview, let's just see. Yeah, November 2005. So this, like the name says, it holds the big 6 banks. The unit NAV is really high, almost at, and I'm filming this basically on June 24th. So the market is already crashed, or it's already in free fall. So for it to stay still very strong here, and you can actually see the date. I love the website. You see the closing price, which is the market price, the net asset value. So this is how much it's worth. And as you can see, there, split share funds, everyone, are closed end funds. So there will always be a discrepancy between the net asset value, or the value of the Class A shares, versus the stock price. So this one is trading at a premium because the stock price is higher than the actual value. So you're paying a premium if you're investing in it. Distribution rates. So this is based on the stock price, not the NAV price. So it's at over 10% now. Management fee 0.55. And this is a pretty big fund, over $300 million. So $350 million. So this split fund, Big Six banks, would compare basically to BK from Quadravest, and also PIC.A from the Premium Income Corporation. I think the company, they changed their company. It used to be Strathbridge, but now it's Mulville or something like that. So this is personally my favorite split fund when it comes to the Big Six banks. I feel it's the best way to own the Big Six banks if you want maximum yield. Okay, maximum yield. So if you look at the portfolio, what does this have? You have the 6 big banks, and you also have, and this is a recurring theme in Brompton split funds, we'll see that in the other ones as well. They always add a little bit of something extra in here to give it a little bit more diversification. So there's 8% allocated to the Brompton North American Financials Dividend ETF. This is their covered call ETF, which I showed you before, which has some of the best North American financials company. So adds a little bit of diversification. So you have mostly the 6 banks, right? 92% or so the 6 banks, but then you have 8% in this covered call ETF. So I found that it's a really, really nice touch. And then if you click on performance, this is where you will see the, I love this website. Again, I can't stop saying that, but you have the annual compound returns since inception. So since the fund was created, basically if you own the fund since day one, your average return per year on average for the Class A shares is over 12%. Absolutely incredible. It's probably a bit lower now because this is as of May 31st. So just keep that in mind. But you see the preferred shares is 5%. The preferred shares will always have a lower total return. Usually, I say always, but I meant to say usually, than the Class A shareholder. So, and then you have the unit, which is basically both of them together. So as you could see for this one, the evidence is clear. You're much better off with the Class A shares. Very, very nice average annual return. And this is really their highest one out of all the split funds. It's the 6 banks. Doesn't surprise me. The 6 big Canadian banks are legendary. Next one is Life and Bank. So it's pretty similar to SBC, except you have the 6 banks and the biggest 4 insurance companies in Canada as well. So the yield is a bit higher because the unit NAV is actually a lot lower, right? It's closer to $15 than, so basically the lower the unit NAV is, the higher your reward will be because the leverage is higher. But the more at risk you go, you're taking to go under $15. As soon as this is under $15, there will be no dividend paid out for the Class A shareholders until it goes back up over $15. So this is their second biggest split fund, $625 million. Very, very popular one. I love this one. I've owned it for a while. Management fee is 0.60. And if you look at the portfolio, you basically have the 6 banks plus the big 4 insurers in Canada, which is Great-West Life, Sun Life, Manulife, and IA Financial. So another financial themed one. They also have one that's just the life cos, just the life insurance company. So Great-West Life, IA Financial, Sun Life, Manulife, and Quadravest also has one as well. I think it's called LFE. And the thing is with the with split funds that only have the life insurance companies, the Class A shareholders typically they almost never get dividends. So this one, as you can see, is under $15 unit NAV, right? So there is no dividend and hasn't been a dividend for a long time on the Class A shareholders. If you actually look at the performance, you'll see that the Class A shares is doing nothing. Basically, you broke even. So this is a split fund where, a split fund that only has the life insurance companies pretty much doesn't really work. The evidence is clear. Quadravest has the same problem. So you're only the preferred shares are really worth it, in my opinion. If you actually look at these are the preferred shares. Here it is, LCS. It actually has one of the biggest dividend yields as a preferred share, so over 6%. So if you're gonna, if you want just the life insurance companies, I wouldn't go for the Class A shares. I would go for the preferred shares. So I'm sorry, I'm on the wrong one. LCS.PR.A. But personally, I would never get just the life insurance companies. I would just get LBS. You might as well better off getting LBS and also FLI, the life insurance company covered call ETF from CI is a good alternative if you, for some reason you want just life insurance companies. GDV, this is my favorite split share fund of all time, Global Dividend Growth Split Corp. So this would pretty much has very similar holdings to ZWG and also Brompton's covered call ETF that has the global one that we just saw. I can't remember the stock symbol, unfortunately. But that's when it comes to the holdings, they're pretty much the same. So management fee, a little bit higher, 0.85. The yield is just under 12% now. So the net asset value is 8 and the stock price is 10. So this one always trades at a premium. It's a very popular one. Unit NAV is fairly strong at $18. So $3 above 15, 262 million. This one is growing pretty rapidly. It's one of their newer funds. It was created in 2018, if I remember correctly. Yeah, 2018. And by the way, each split fund has a maturity date or a termination date. This is related to the preferred shares. Okay, I keep getting a lot of questions and concerns about termination dates, maturity dates, what happens. They will keep extending it, everyone. Don't worry about the maturity or the termination date. They have to have one because of the preferred shares. The preferred shares are reset every 5 years. So do not worry about the termination date, please. So yeah, GDV, I want to spend some time on this one because I feel it's really, really strong. You see the breakdown here. So GDV has amazing diversification in terms of both region and sector allocation. So you have all the list of companies here. There's over 40 companies. You'll recognize a lot of them. So it's really a mishmash of the best dividend stocks all over the world. That's why it's called Global Dividend Growth, right? So really, really good split fund, my favorite one of all time. Then they have the Dividend Growth Split Fund. This is actually the biggest one in terms of assets under management. So this guy's main competitor is DFN from Quadravest. So this is Canadian focused. And as you could see here, I'm filming this on the 24th. The unit NAV just went under $15, which means there is no dividend that will be paid out for the Class A shareholders. But of course, that's why the yield is really, really high. So basically what this yield means is if you buy the shares right now, you will get, or you are booking, a 23.95% dividend yield but only when the dividend restarts, only when the unit NAV goes back over $15, which it will. It's just a matter of time. So if you click on the portfolio, this is Canadian focused, everyone. So it has basically all the best Canadian dividend growth stocks. We got the big 6 banks, but unlike DFN, which is a little bit more concentrated, it's only 15 stocks. This is about 30, and you have some other great Canadian companies like Dollarama, Loblaws, Fortis, TFI, Thomson Reuters, Tourmaline here, Nutrien, Imperial Oil. So it's a lot more diversified. Waste Connections, ARC. It's a lot more diversified than DFN, except the unit NAV is lower. So it's definitely a little bit higher risk than DFN in terms of missing dividends. And again, here's a little diversification, 10% or 9.5%. They added the Brompton Global Dividend Growth ETF, which gives it a little bit of diversification on top of all Canada. So you have 10% of global dividend companies, which is pretty much mostly in the United States. So again, this is a reoccurring theme, right? GDV has this, Split Bank has this ETF here. So definitely a good split fund. If you look at the performance, it's over 10%. Right. So although DGS does miss dividends once in a while, the performance speaks for itself. It's over 10%. It's really, really awesome. And this is including the missed dividend. So you shouldn't be afraid of missing dividend once in a while, but expect it with DGS or split funds in general that are closer to that $15 unit NAV. And by the way, I forgot to show you the performance on LBS. It's fairly good performance as well, 10.5. So obviously not as good as the split, the one that just has the banks. Apparently in Canada, the best 6 stocks to own are really the banks. The evidence is really clear, but yeah, this is definitely, this one here is Canadian focused with a little bit more diversification. So you have the best Canadian dividend stocks. One of the newest one, PWI, the Sustainable Power and Infrastructure Split Fund. I own this one. I put 20K on it. I like it because it gives you a really high yield way of getting some green energy stocks. So like the name says, Sustainable Power and Infrastructure, you're going to have a lot of infrastructure, a lot of utilities stocks in here. Unit NAV is, surprisingly, it's very close to 15, but it doesn't really surprise me. The whole market is selling off. So this is, if you look at the portfolio, Again, here's that thing where they always add an ETF. So they have 5% in the Brompton Sustainable Real Assets Dividend ETF, like I covered when I went over the covered call ETFs. And all these companies, you might recognize some, you might not recognize others: TELUS, Bell, Brookfield, Exelon, Lind. I think this is chemicals or something like that, if I remember correctly. But Enbridge, Prologue. This one here is real estate, data centers. So all these companies are in one way or another related to sustainable power and infrastructure. So it's not all green energy, which I kind of like. So you have the breakdown here, right? There's utilities, industrials, materials, energy. So everything to do with sustainable power and infrastructure. So I like this one. I have a little bit in here. Last but not least, one that I don't own, the Brompton Oil Split Corporation. So this is the only split fund out there that deals only with energy. And, it's a small fund. I probably wouldn't recommend it. You'll have to be brave and really, especially for the Class A shares, they typically always miss the dividend because the unit NAV is always under $15. It was actually over 15 a few weeks ago, but now it's back under 15. So unfortunately, no dividend. But the preferred shares have a pretty high dividend of 6.67. So this is, if you want just oil and gas, I feel there's other better options out there like NXF or HPF from Harvest. But hey, if you just want oil, energy, this could be an option here. You have a bunch of big cap oil and gas energy companies here, mostly in the United States. But I mean, I personally wouldn't get the Class A shares unless you're trying to really swing trade it. It's possible to do well swing trading these shares, because don't forget, split funds are leveraged, right? So they go up, down, they go up hard, and they go down hard as well. So yeah. So these are the split funds, everyone. I own 5 out of the 7 myself. I really like them. I own all of them except LCS and OSP. My favorite one is definitely GDV. DGS is for your diversified Canadian exposure, which competes with DFN. A little bit higher risk in terms of missing dividends, but higher reward, of course. And don't let those dividend misses fool you. This still has a good annual total return like we saw. GDV is just my favorite because of the diversification. So this is a one-stop shop to really get the best dividend stocks all around the world with leverage. So you could consider this, compare this to ZWG, but it has leverage. And then LBS and SBC for your Canadian financials. LBS has the insurance ones. SBC only has the banks, and of course SBC is definitely the lowest risk out of all of them because it has the highest NAV, right? The highest unit NAV, so it's about 1950 unit NAV. But of course, the higher the unit NAV, the lower the risk and the lower the yield, or the lower the reward. Just PWI is keep in mind that PWI is not paying 10 cents a month; it pays 6 cents, so it doesn't pay out as much. So keep that in mind when you're saying, hey, I mean the NAV, the dividend is higher on SBC, but it has a higher NAV. This one has a lower NAV and it has a lower yield. It doesn't really make sense. Well, it's a newer split fund and it doesn't pay out as much. So just take that with a grain of salt as well. So there is Brompton Funds, everyone, the entire lineup. So there you have it, everyone, all the funds from Brompton. As we saw, they have quite a few split share funds, including my favorite of all time, GDV, the global one. So I own 4 of their split funds myself, and I couldn't be happier with them. Now, although I don't own any of their covered call ETFs, I still think they could be a great addition for income-oriented investors who are not necessarily looking for maximum yield, but also want a little bit of growth or a little bit more balance between the income and the growth. So if you compare their covered call ETFs to other providers that we all love, like Harvest, like CI, you'll see that their yield is lower, but they do have still great total returns, which is very easy to find on their really nice website like we saw together. So this brings me to the great news I have to share with you. I am happy to announce that I have already done 2 amazing Q&A interviews with Brompton, and they will be published in the following couple of weeks. So I spoke with Chris Cullen, who is in charge of their covered call ETFs, as well as Michelle Tiraborelli, who is in charge of their split fund. So that's right, a legit split fund manager, just like Middlefield. And I did not hold back on the questions, everyone. We talked about split funds in detail, including overnight offerings, termination dates, the $15 unit NAV rule, right? Why it exists, management fees, what happens when the dividend stops for the Class A shares when the unit NAV goes under $15, etc., etc. So it's a really, really cool interview. Trust me, you do not want to miss these interviews, especially if you own split share funds, if you have concerns and questions about them as well. All will be answered in these interviews. So if you own any of the Brompton funds or you're thinking of investing in them, I strongly suggest you check out these two Q&A videos. I mean, this is information straight from the source, guys, from the fund managers themselves. So really great, informative, and honest conversations I have with two really, really cool and awesome people at Brompton. So stay tuned for those videos. Thanks for watching, everyone. Really appreciate it. Make sure to hit that like button, that thumbs up button. It helps the channel grow, so it's a win-win. Also, make sure to subscribe if you're not already subscribed, not to miss out on my future content. It's all about income-focused investing. And also, you got to be subscribed if you want to participate in my surveys where I ask the audience, I ask you what topic you want me to cover next. So very important, subscribe, hit that little bell button so you are notified of any new videos and any new surveys as well. Make sure to check out our website. We have a website, passiveincomeinvesting.ca. That's where you could purchase my digital product that I'm very proud of, the ultimate DIY investing package, which is on version 3 right now. So this is a reference tool. It's a companion tool to help you build your own custom portfolio. It's good for Canadian investors and American investors. So it covers both the Canadian and American stock markets. It has sample portfolios as well, multiple sample portfolios for different investing styles. So it's a very cool product, and it does come with lifetime updates. So you only have to purchase it once. My intention is to come out with a new version every single year. So you purchase it once, you never have to pay for it ever again. You'll get the lifetime, the updates for free forever. Also, right there on my homepage on the website, I do offer a one-on-one coaching session. If ever you want a little more personalized help, it's a 1-hour Zoom call with yours truly, a one-on-one with me where you could ask me anything you want. We'll go through your situation and I'll give you my opinion on how best, I'll help you best I can, basically based on my opinions. Just keep in mind that I am not a licensed or registered financial advisor or financial planner. We also have a Facebook group, so join us there, Passive Income Investing, over 11,000 members. We try to get the spams and the scammers out of there as quickly as possible. So it's a very, very clean group. Everyone's asking questions, trying to help each other, and it's a really, really cool and fun community. If you want a little bit more personalized stuff on our day-to-day life, follow us on Instagram as well. We recently moved to Panama, so if you want some more information on more personal stuff, you could follow us on Instagram. My mission, the mission of this channel, will always remain the same, everyone. It's to help everyday, regular, normal, working people to invest on their own, do-it-yourself investing, right, in order to build their own stream of passive income to enhance their quality of life and one day become financially free, financially independent. Very important goal. So, as usual, continue to stay safe, everyone. Stay healthy, and of course, stay passive. See you next time.